Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. PBOC cuts. China ramps up efforts to limit the impact of U.S. tariffs, even as Washington and Beijing confirm high-level talks beginning this week. Meanwhile, the Fed expected to hold later today as officials wait for more clarity on the trade war. India strikes what it calls terrorist camps in Pakistan, and Islamabad retaliates by saying it shot down 5 Indian jets, raising concerns of further escalation. And we'll look at the AI race across the Middle East with Presight CEO Thomas Pramotedham after the company's first quarter earnings. Well, it has just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, keeping a close eye on the tensions that have been flaring up between India and Pakistan today. We'll talk more about that on the show. But also in terms of markets, some significant developments coming through. It is a big day for anyone who watches these markets with the Fed meeting coming up. Not expected to cut interest rates today, of course, but signals about the path ahead will be closely watched out for. And out of China today, we got a triple R cut and a cut to one of the key rates as well. So some monetary stimulus coming through, and that is giving a bit of life to these markets. As you can see, the S&P futures leaning towards the green, up 0.6%, despite the pullback that we had in Wall Street yesterday. And we have 2-year yields going into the Fed meeting, not doing a whole lot today, but it is noteworthy that the market is pricing in about 80 basis points worth of rate cuts out of the Fed. Will they be able to validate that pricing coming out of the presser this evening? That's a big question. USD actually gaining ground this morning, up 0.3%. So the dollar has been steadily trying to recuperate some of the losses for the first few months of the year. And then gold in focus today, obviously as a safe haven, down 1.6%, reacting to perhaps the positive signals coming through on the potential for U.S. and China to have trade talks, but then also some of these stimulus measures announced through from China overnight. So that's been a bearish driver for gold. But of course, keeping a close eye on the geopolitical situation between India and Pakistan. So let's move on because we are keeping a close eye on what is going on between India and Pakistan. This after India targeted military strikes against Pakistan, and then Islamabad responding by saying that it had shot down 5 Indian jets. And later this hour, we're going to bring you a briefing from Indian authorities. But let's just take a look. Pakistan's KSE will be open for trade in the next half hour or so. So just looking at how that market is going to open. Just for context, back in 2019, when there was an episode similar to what we got this morning, the index opened down 5%. So let's just keep an eye out on where this stock exchange opens in the next hour or so. The Nifty is open for trade in India. We're up about 0.2% and actually has been one of the best performing stock markets since Trump's tariff announcement. India positioning itself, of course, as a beneficiary in the so-called trade war and a beacon of stability in the Asian region. But of course, with the flaring of geopolitical tensions, maybe some question marks about the geopolitical stability. But that is the picture for the Nifty today, up 0.2%, and also keeping a close eye on the rupee. As you can see, not a lot of movement in currency. It is about 0.1% weaker versus the USD. So we're going to keep tracking these markets closely when the KSE is fully up and running for trade. And of course, we will bring you that press conference out of Indian authorities later in the hour. But let's switch over and talk about some of the monetary policy news coming out of China today. Because China did reduce its policy rates and lower the amount of cash lenders must keep in reserve as Beijing ramps up efforts to help an economy caught in a second trade war with the U.S. The measures were revealed after the two sides announced their first high-level face-to-face talks on tariffs beginning in Switzerland later this hour. So let's bring in our China correspondent, Min Lo in Hong Kong. So Min, maybe just give us and talk us through the significance of the China monetary policy measures this morning, that triple R cut, the cut to one of the main lending rates. How big of a deal is this?
Yeah, there had been huge expectations going into that briefing because the big wigs were out, the PBOC Governor Pang Gongsheng, the CSRC Chair Wu Qing as well. And I would say generally those expectations were met. People were wondering whether there will be rate cuts, and yes, they delivered. The PBOC announcing 0.5 percentage point cut to the triple R, which is a pretty outsized cut. It's not just 25 basis points. And also a 10 basis point cut to the policy rate, which according to our Bloomberg economic economics team is pretty much in line with expectations. And I'm going to run through quickly as well some of the other measures. It's a series of very comprehensive measures, including 800 billion yuan in relending facility to support the tech sector. That is China's long-term priority. And also the elder care, consumption sectors, those are also getting some support in the form of a 500 billion yuan relending facility and another 300 billion yuan relending facility supporting the agricultural as well as small and medium-sized enterprises, some of these companies that are most hard hit by the tariffs. And on top of that, some market stabilization measures as well. The CSRC chair Wu Qing announcing that Central Huijin, one of the national sovereign wealth funds, commonly known as the national team, will be stepping in to stabilize markets to act as this quasi-stabilization fund. So a series of very coordinated measures coming all at the same time, very powerful package to really support China's economy. It also begs the question of why now, because actually if you look at how China's stocks have been performing, they've pretty much recouped most of the losses since Liberation Day. It's been pretty steady. Volatility in April had been at record low for Chinese onshore stocks. The 10-year yield had been pretty range-bound as well. And some analysts are saying that perhaps this is not just about easing, it's about laying the groundwork for resilience and for retaliation if necessary. And this, of course, coming just ahead of those trade talks with the U.S. as well.
Let us talk about those trade talks, because now we actually do have confirmation that they're going ahead. Remember, there was a lot of vagueness about whether President Trump had actually spoken to President Xi. Now we know that Treasury Secretary Bessent will be involved in those trade discussions. What can we expect out of them, Min?
Yeah, it is a good sign. One of the first signs so far of both sides having coordinated messaging. As you said, the last few weeks had been a lot of confusion, Chinese and U.S. officials talking about different sets of things. This is the first time we saw both sides coordinated their messaging, both sides putting out their statements at 6 a.m. Beijing time today, acknowledging that, yes, these trade talks are finally happening in a neutral third-party country in Switzerland. He Lifeng, China's vice premier, will be overseeing those talks. That's a very high-level official. The same position. If you look at the first trade war, the trade talks were overseen by the vice premier at the time, Liu He. This time, it is He Lifeng. So that's a good sign that this is happening at the highest level possible, aside from, the top leaders coming out to speak to each other themselves. And expectations are high, of course. Anticipation around, what the U.S. will offer, to what extent are they going to lower tariffs. And meanwhile, Chinese Commerce Ministry also releasing a statement again saying that U.S. needs to show its sincerity, that it needs to be the one to remove all unilateral tariffs here.
Yeah, it's certainly a positive signal for markets. Bloomberg's China correspondent Min Lo, thank you so much. Now, most Asian stock indexes are higher after China's central bank said it will cut rates, and Beijing confirmed plans for high-level trade talks this week with the U.S. So joining us to discuss this and more is Manpreet Gill, Standard Chartered Wealth Management CIO of AMEE. First, maybe let's just start with China and the announcements overnight. Our own Bloomberg economics team have said this is a very powerful signal, and they expect that the measures today could lift GDP growth by as much as 0.8 to 1 percentage points over the 4 quarters. So it feels as though the initial assessment is one that's quite bullish for the Chinese economy.
It is. And one of the theses behind our relatively more positive view on Chinese assets has been the view that, yes, we know that trade tariffs from the U.S. have a negative impact on growth. But we've been of the view that Chinese policymakers would be willing to lean against that with policy support, and I think we've really got some of that. It does start to shift the focus a little bit away from just the downside risks to perhaps allowing a bit of optimism to start creeping back in to say, okay, to what degree can we get an offset?
For China watchers, is there an expectation that the tariffs will be reduced? And if so, what is the market pricing? Where do we end up? Is 50% a good outcome? Is 20% a good outcome? I mean, what are China watchers saying?
I think we're at the stage where it is still quite hard to get a precise sort of handle on those sort of numbers, even though that's what we'd all like. I think all markets are focusing on at the moment is that, after what have been several weeks of focusing on the downside risk to growth, downside risk to earnings, we're now starting to get a rising probability that, of the better, more optimistic scenarios where growth is not as bad as feared, earnings are not as bad as feared. And I think that we think will be enough to provide, kickstart to market. So that's the reason we're still overweight Chinese equities within Asia ex Japan. And I think the stimulus, the fact that the two governments are talking to each other, those we think are enough to start raising those probabilities.
So overweight Chinese equities, are you overweight versus U.S. equities? Because we're seeing some stabilization come through in U.S.
Sure. We take our views on China relative to Asia, Japan. So obviously the debate is versus Indian equities versus foreign equities. But to some degree, look, our broader view on equities is that this is a time to have a spread of exposure across regions. Because a lot of the recent focus has been, of course, for example, on U.S. equities in recent years, Chinese equities as well, for good reason. But we think we're in a world today where have balanced exposure to other regions like Europe, Asia, and within Asia, of course, China is overweight, but we also have a sizable allocation to Indian equities. That, we think, is what's attractive in this environment.
Yeah. Okay, let's talk about the Fed. Big meeting coming up today. There's nothing priced in for today's meeting. 8 basis points of cuts for June. Basically, a full cut priced in by July. Do you think that we're going to come out of this meeting with the market's interest rate expectations being validated?
We'll most probably see a little bit more of the Fed sort of signaling there's still a lot of uncertainty out there. If we're talking about today's meeting in particular, the Fed's sort of been sitting on its hands and basically saying, look, it's hard to signal a decision without more certainty on where the growth and inflation impact of tariffs ultimately ends up. And the fact that we've started, a lot of trade negotiations are in motion makes that harder. But we do think the Fed will ultimately get to that point, whether it's at this meeting or in the next couple, where they'll start to signal greater comfort cutting rates later this year and early next, which is our baseline assumption. So I think it's the signaling today, where they're willing to budge from that neutral, no commitment stance. I think that's really the most important thing.
How important is it for the direction of travel for risky assets that the Fed restarts the cutting cycle once again? How important is it, do you think, for the continuation of the stabilization in markets?
Look, I think it's one important factor because now let's rewind back a few months and say, okay, when we think about a growth outlook, we have the impact of tariffs and trade policy. That's perhaps still the most important driving factor. And negotiations are what we're watching there, what the contours of any first trade deal look like. But one assumption I think built in, and certainly one thing we've been considering on a full year basis, is that at some point, growth worries would outweigh the inflation worries, allowing the Fed to cut. And let's not forget, Fed policy is arguably still quite a way above what the Fed believes its own neutral rate to be, around 3%. So we do think that's still an important sort of cog in the wheel.
Yeah, I guess you have to distinguish between insurance cuts and the Fed trying to get ahead of a market that's slowing down or an economy that's slowing down versus an economy that's headed to a recession. Because if the U.S. economy is headed to a recession, obviously that is bad news. It's difficult to see risky assets perform in that environment. But if the Fed is trying to get ahead of a possible slowdown, then that potentially could still be good news because they're still ultimately leaning towards a soft landing.
Absolutely. I think what makes that hard is that the line between a slowing but soft landing and slowing all the way into a recession, it's a fairly narrow line in economic terms. And I think the confidence indicators are the other piece that are sign of some concern. But Fed cuts are absolutely one of the reasons why we still think we'll be able to just about achieve a soft landing. But I think it's about Fed responding, we expect soon enough to avoid that recessionary outcome. And that'll be one key. It's not the only one. I think we still need some trade deals. That'll still be in ranking with the most important factor, but Fed cuts alongside.
Manpreet, always good to chat to you. Thank you so much for coming on our show today. Manpreet Gill, Standard Chartered Wealth Management, CIO of AMEE. Now, coming up, Pakistan says it shot down 5 Indian military jets as Indian forces hit suspected terrorist targets in Pakistani territory. An update on the conflict next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Pakistan says it has shot down 5 Indian planes that were attacking targets inside its territory. India says it ordered the strikes against what it calls terrorist camps after last month's militant attack in Kashmir that killed 26 people. Bloomberg's Ruchi Bhatia joins us from New Delhi. Ruchi, we're keeping a close eye on the developments between Pakistan and India over the last few hours. Just bring us up to speed. What exactly happened and how significant is the tit-for-tat exchange that we've seen?
Well, India said that it conducted military strikes against Pakistan, which says it shot down 5 fighter jets as far as India is concerned, in what can be seen as intensification of the conflict between the two nuclear-armed nations. This is, of course, not coming in at a good time for India, because India is in the midst of several trade deals with the US. It signed one with the UK yesterday. And on the other hand, you have Pakistan that is just coming out of the crisis that it saw over the last couple of years, and it is going to see the next IMF loan being taken up by the IMF board on the 9th of May. Having said that, as I said, the Indian army is calling it a very restrained strike. On the other hand, Pakistan has said that if there is any more intensification, then they will look to retaliate further. This is, of course, coming in as global leaders have called for a peaceful resolution. In fact, U.S. Secretary of State Marco Rubio reached out to both India and Pakistan soon after the strike, and he has sought for more restraint by both nations. India, on its part, is saying that already their actions show that they have conducted these strikes in a very restrained manner. Remember, India had vowed to retaliate after a gunman killed 26 people in the Indian-administered Kashmir region. And this is, as I said, can be seen as an intensification of the conflict. The two nuclear-armed nations have been engaged in several conflicts over the years, but this clearly has been one where we've seen that the reaction has been a lot more. In fact, the nine targets that India targeted is the deepest that India has gone in terms of targeting territories in Pakistan since the 1991 war.
Yeah. Thanks for the context there. And we know that the Indian authorities are going to be giving a press briefing, we think, in about 45 minutes' time. How worried should the international community be about further escalation?
The international community certainly has called for more restraint. They are keeping a close watch as the developments unfold. As I said, Pakistan has targeted 5 fighter jets for India, and India on its part has so far said that they will look to take any action with a lot of restraint. Having said that, we haven't heard yet on Pakistan's claims from the Indian side, and the Indian Army will be briefing in about 45 minutes from now. We're expected to hear more from them. Also, remember, Prime Minister Narendra Modi is chairing a meeting with the Cabinet Committee on Security at 11 a.m. local time this morning. Also, you will hear from the Pakistan National Security Committee meeting as well. So those 2-3 briefings will be and events will be an important one to watch out for, to see where things are headed from here. But for now, it needs to be seen. And in fact, even the markets are keeping a very close eye on whether this conflict escalates further.
Ruchi, very good to have you with us on the show. Bloomberg's Ruchi Bhatia in New Delhi. Thank you. Now, coming up, President Trump says the U.S. will end its bombing campaign against Houthis in Yemen, but the rebel group vows to continue operations supporting Gaza. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. President Trump says the U.S. will stop its bombing campaign against Houthis in Yemen after a ceasefire was facilitated by Oman. But the Houthis have pledged to keep targeting Israel over its Gaza campaign. Meanwhile, Israeli jets struck the airport in Sana'a on Tuesday, 2 days after Houthi missile landed close to the international hub in Tel Aviv. For more on this, Bloomberg's Dan Williams joins us now. Well, Houthis very much back on the agenda. Let me just repeat the comments that President Trump made, actually in his press conference with Mark Carney, out of all people. But he was saying that they would stop the U.S. bombing campaign against Houthis immediately because the Houthis had capitulated. What do we make of those comments?
Well, it's clear that the president who's heading out here into the Gulf in just a few days sees this as an achievement in terms of American interests. He described the American bombing campaign, the escalated American bombing campaign against the Houthis, as a means of protecting shipping in the Red Sea, a major international lane. And to hear him tell it, they have now backed down. However, it's worth remembering that there's always been a delicate triangulation here in this conflict, because those Houthi attacks, both on the shipping and directly on Israel, to hear the Houthis tell it, were a reaction to Israel's war in Gaza. We've had zero reaction from the Israelis to this deal, as announced by Trump, which would appear to have split off Trump from his Israeli ally, at least when it comes to how to contend with the Houthis.
Well, the Houthis have responded saying that they will keep targeting Israel over the Gaza campaign. So to your mind, are they trying to draw a distinction, or at least is the U.S. trying to draw a distinction between the attacks on the vessels going through the Red Sea and the attacks directed towards Israel, as we saw over the weekend?
I think it's very clear, and if true, I think it would be very cunning on the part of the Houthis, given that Israel looks to the United States, its guardian ally, its main ally, its supporter in its defense, and its supporter in this Gaza war. The real question is, will the Houthis actually attack Israel again? Will they turn this into a de facto three-way triangular truce that spares Israel more attacks of the kind that we saw on Sunday on that airport, Ben Gurion Airport, which triggered back-to-back Israeli strikes against Hodeidah Port and the international airport in Sana'a.
And the international airports yesterday. And I thought it was really interesting that the Israel's defense minister, Israel Katz, said the strike should be seen as a warning, too. And this is a quote, head of the Iranian octopus. So from Israel's perspective, they still see the Houthis as a very close proxy to Iran, even though the Houthis, for all intents and purposes, tend to act quite autonomously.
Indeed. I think in this conflict, a multi-front conflict against Israel, which began with Hamas in Gaza, it's fair to say that the Houthis are the last man standing. Israel would describe them as an asset of Iran, allied with Iran, and indeed I think the Israelis are now looking at a potential direct conflict with Iran. Some in Israel saying, why deal with a proxy, an ally, if you like, an asset of the Iranians when Iran should be dealt with directly? That's also something on the U.S. agenda. I imagine Trump will speak to it when he comes to the Gulf.
Dan, if there is a deal of some sorts between the U.S. and Iran, do you think that that means we will get a de-escalation on the Houthi front?
Yes.
You do think that is the case, yeah, because Houthis see a linkage between the two?
Yes, I think there's an overriding Iranian aim here. If the Iranians see that their interests have been safeguarded, that might be enough for them to back down. I'm not sure, though, given the situation in Gaza, grinding on, the Houthis have described their attacks on Israel as almost a humanitarian alliance with the Palestinians in Gaza. The Houthis are sworn to Israel's destruction. Nonetheless, if they see that continue, they may decide to continue shooting.
Yeah. Dan, good to have you on the show. Bloomberg's Dan Williams. And coming up, Presight AI announces a whopping 115% jump in first quarter revenue year on year. We'll discuss the results with the CEO, Thomas Pramotedham, next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. PBOC cuts. China ramps up efforts to limit the impact of U.S. tariffs, even as Washington and Beijing confirm high-level talks beginning this week. Meanwhile, the Fed expected to hold later today as officials wait for more clarity on the trade war. India strikes what it calls terrorist camps in Pakistan, and Islamabad retaliates by saying it shot down 5 Indian jets, raising concerns of further escalation. And we'll look at the AI race across the Middle East with Presight CEO Thomas Pramotedham after the company's first quarter earnings. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. Well, the market's getting a bit of a boost in the overnight session and in Asia because of the announcement out of the PBOC that they are cutting rates, cutting the RRR rate. That's been met with a positive reaction in some of these Asian markets. S&P futures leaning towards the green as well. This as well on the back of positive signals about the potential for trade deal discussions between the U.S. and China as soon as the end of this week. So positive on the trade front. And of course, today we got the Fed meeting. evening. No rate cut expected today, but again, the market is pricing in 80 basis points. Will the Fed actually match up with the dovishness that's priced in? That's going to be a big question for investors. Two-year yield sitting at 3.8, so about 80 basis points priced in. Not a lot of movement today. We're about 1.5 basis points higher on the session today. USD seeing a bit of love, a bit of support come through for the dollar. We're up about 0.3% in trading this morning, so gaining ground versus other currencies. And then gold actually trading a little weaker, down 1.4%. Let's switch over. We're also keeping a close eye on the geopolitical developments, the tensions between India and Pakistan after India's targeted military strikes against Pakistan, and Islamabad responding by saying it had shot down 5 Indian jets. We're also awaiting a briefing from Indian authorities expected to take place in the next hours. So this is where the Pakistan KSE index opened down 5.2% on back of those the tit for tat and the escalation that we saw overnight. In comparison, back in 2019, when something similar happened, it also opened down 5% weaker. So those are the initial trades that we're getting out of the Pakistan index. Take a look also at the Nifty in India. We're also down 0.2%. At one point, it was up in the green, but we've lost some of the ground trading in negative territory, but has been actually one of the best global stock markets performing indices this year, especially in this world of tariffs. And then the Indian rupee, you can see trading slightly weaker versus the USD today, about 0.1%. So we'll keep a close eye on further announcements and developments from India and Pakistan. Let's switch over now and talk about artificial intelligence. UAE tech firm Presight has reported a first quarter revenue jump of 115% from last year. The company cites its accelerating global expansion as the reason. So joining us now is Presight CEO Thomas Pramotedham. Really good to have you with us on the show. It sounds like it was a bumper quarter for Presight.
It is. It's good to be back.
Strongest quarter to date.
Yes.
115% increase year on year in revenue. Where's the strength coming from?
I think this quarter, the financial matrix is demonstrating a convergence of the strategies we put in place since we did the listing. The domestic expansion continued to be strong. Our internet expansion is just going on stride by stride. So last year we had 23% international. We're striding towards 40% international. But more importantly is the strategies of domestic strength, internationalization. But at the same time, we've launched accelerator programs that is to bring UAE AI companies from all around the world. We closed the accelerator program last week and had 105 applicants across 30 countries.
Interesting.
Yeah, the quarter is really a convergence of the strategies we put in place.
Okay, so you're placing more and more emphasis on international, it would seem. And even looking at your earnings, international revenue has multiplied by 5 times in the past year. So obviously it's a fast-growing sector. In the press release, you talk about your presence in Kazakhstan, a 6-year agreement in Astana, a letter of agreement in Albania. Talk to us about what you're looking to do there.
A lot of it in the global south market, especially in the emerging economy, digital transformation is changing the way the government works, before it translates down to state-owned enterprises. In Astana, the Astana capital city, implementing a smart city to manage traffic, manage civil services is a step towards. But that creates a platform for the country to develop a platform that supports the other cities, Almaty and Shymkent. In Albania, the platform will serve 20 cities. So you see this pattern of digital transformation, taking the application of data analytics, AI, automation into how they run their cities. And we'll see, and I forecast, we will see more of this transformation across the cities in the global south markets.
Yeah, would you say that then the growth markets, the biggest growth markets for you then are in the global south? Is that a focus of Presight?
Yes, that's a true belief. Presight was set up as an Abu Dhabi-based Emirati developed technology. We focus largely on the global south. We're established in Africa, Central Asia now, with Kazakhstan's a project with a regional HQ. There's 40 staff there. Albania coming up next. I believe that now in the next 10 years, this is the growth engine.
Yeah. Do you plan on opening up an office in Albania then?
Definitely.
You will?
Definitely.
Yeah.
The Balkan itself is a growth region too.
Yeah. I want to ask you perhaps a more, I guess, bigger picture question about AI. My colleagues and Bian wrote an article talking about how when it comes to foundational models, the UAE is actually behind the rest of the world. And, US and China are leading the race there in terms of the most actively used, the most efficient LLMs. Do you think that could hold back some of your own ambitions on the application side?
So I'll take the question in 2 ways.
Yeah.
One, I think the UAE is not in the business of LLMs, right? So we forayed into the most advanced Arabic LLM called JACE by G42. We've launched the Kazakh LLM, made it open source with our colleague from Inception. We launched a Hindi LLM. The LLM foundation models are what drives adoption, right? And then, of course, you have the open models that's now available. Llama 4, Microsoft does it. Of course, you have the DeepSeek discussions around that. I think that will continue to drive base models. UAE's focus is, as a whole, I think it's in applied intelligence, right? So developing agentic AI, which is the buzzword right now, is really where applied intelligence is, where you have domain specialized language models, smaller, more specialized, but collaborating. So the whole agent-to-agent discussion, I think that's where we're focusing on. UAE is also focusing on infrastructure. So the investment in the digital AI infrastructure, compute is a key part of it. So Presight benefits from that. So one, we are model agnostic. We continue to benefit from the open models. We want to develop domain-specific agents, like what we've done with ADNOC, the energy large language model through AIQ. That's the world's first agentic AI model in upstream operations for oil and gas. And we want to develop more of that. And then leveraging of G42 as an ecosystem, we have access to compute, even though we are infrastructure agnostic, but the Microsoft arrangement and Microsoft investment in us continue to give us a strength to adopt the latest infrastructure and latest algorithms.
Yeah, interesting. Thank you for tackling that question. I also saw in your press release, you've announced the launch of the Presight AI Startup Accelerator partnership with MBZ University of AI. What role do you see Presight playing, and also just the broader G42 structure in digital diplomacy around the world?
That's actually one of the most exciting news I had this quarter. When we launched the AI Accelerator, it's uniquely UAE. Why so? Because one, it taps on the UAE AI ecosystem, so largely the G42 ecosystem and the AI vision of the leadership here. Two, Microsoft is also a close partner. The company's got access to compute, which is one of the most desired resource right now. But thirdly, we give them access to 14 of Presight's markets, right? So we're doing this batch of 10 companies every 6 months. So we do this twice a year. This current batch has 105 applicants across 30 countries. What we're seeing is the draw that positions UAE as a capital of AI and a tech hub, and Presight as a platform together with G42 to help these companies springboard into the global south. But we're also seeing companies in the US and Europe that has established themselves will come and apply for the program, because in their mind, they see the global south as net new growth for the next 5 to 10 years. So it's a very exciting program. I think through them, we can increase our own IP portfolio. It gives a pipeline to our merger and acquisition strategy. It gives us sight and a test of the many AI companies that are coming up today and which are the ones that will really bring impact to the customers that we serve.
Yeah, it's smart. Well, it's called Smart Accelerator, isn't it? Thomas, thank you so much for joining us.
Thank you. Thanks for having us.
Chat to you. Thomas Pramotedham, Presight CEO. Okay, let's turn to Kenya, which has revised its budget estimates for 2025 to 2026. The National Treasury is planning for a wider deficit on increased spending. Just last week, the government had announced plans to trim its budget and reduce its debt burden. For more, Bloomberg's Ondiro Ganga joins us now. Ondiro, how feasible is it for the government to actually put forward a lean budget?
Hi, Jumana. It's not insurmountable, but it's going to be an uphill task. Government expenditure is growing. If you look at last year, total expenditure was 3.99 trillion shillings. This year, they started at 4.3 trillion shillings, and now they've revised it down to about 4.2 trillion shillings. And if you look at recurrent expenditure, it's growing. Development expenditure is growing, and granted so because Kenya is an economy that is very much infrastructure-driven. They have to invest in education, healthcare, agriculture, and road network to try and catapult growth in that economy. But the government also understands that there have to be austerity measures. It's give and take. They'll have to cut and they'll also have to raise revenue. Counties are going to have to contend with a little bit less revenue. And also the government will contend with less revenue coming from grants, which will drop by about 11%. They're hoping that ordinary revenue goes up by at least 7% so they can be able to raise money. They're aiming also at tabling a finance bill. They're hoping to raise 30 billion Kenya shillings as opposed to 346 billion that they were hoping to raise last year. These plans through the finance bill last year were botched following deadly protests. And if we go back to the question, will they be able to do it? We know that Kenya pulled out of its IMF final review and forfeited $850 million because they couldn't meet the conditionalities. And one of those was reducing the budget deficit. So this is an area that the country is currently struggling with, and it doesn't look like they'll be able to do it in the near term.
Yeah, and at the same time, growth came in lower than expectations last year, despite some of the government's best efforts. What is the outlook for growth with the backdrop of this budget?
The prospects are looking up. If you look at the central bank, they've been able to slash their rates by 300 basis points, and they've brought interest rates to about 10%. And the hope is that this will drive credit to the private sector and accelerate growth, because previously, when rates were high, the private sector was not borrowing from the banks. Instead, the banks were lending money to the government. And because of this, there was a liquidity in the market, and that led to slowed down growth. If you also look at other challenges in the country, we had deadly protests that led to the death of over 60 people. And these businesses have to contend with challenges like an unpredictable tax environment. This not only affects them because it eats into their revenue, it affects the end consumer because they have very little left to be able to go back to these businesses and purchase from them. Couple that with unfavorable regulatory environment and also just a very harsh business environment, then businesses are struggling. So growth can happen, but it will take more than the central bank to be able to inject growth in this economy. It will take a lot of government goodwill, and it will also take the government keenly looking at their policies, particularly taxes, in order to help these businesses save up a little bit of money, reinvest in these businesses, create jobs, and hence ensure that there's a little bit more to go around in the economy.
Bloomberg's Andira Ganga in Johannesburg. Thank you so much for the latest. Now, Sudan's military-backed government has formally cut ties with the UAE over what it described as ongoing aggression in the North African nation's civil war. The decision came hours after a third drone attack in as many days rocked the main coastal city of Port Sudan. Sudan has accused the UAE of supplying weapons to the Rapid Support Forces militia, an allegation Abu Dhabi has repeatedly denied. Sudan says it will shutter its embassy in Abu Dhabi. The assaults on Port Sudan signal a new phase in the fighting that's left as many as 150,000 people dead and sparked the world's largest humanitarian crisis. French President Emmanuel Macron will host his Syrian counterpart Ahmed al-Sharaa in Paris. It will be the Syrian president's first official trip to Europe since the toppling of Bashar al-Assad in December. Macron and al-Sharaa are expected to discuss the stabilization of the region and the fight against terrorism. Macron will also reiterate France's support for the reconstruction, while the lifting of sanctions remains a priority for the Syrian leader. And coming up, Qatar Airways is gearing up for a big announcement when U.S. President Donald Trump visits the region next week. We'll discuss what's in the pipeline next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. BlackRock CEO Larry Fink, Citigroup's Jane Fraser, and top bosses of American tech firms will visit Saudi Arabia along with the President Donald Trump next week. They're slated to speak at the Saudi-U.S. Investment Forum on May the 13th. The event is being held on the day Trump arrives in Saudi Arabia, where he is expected to meet the Crown Prince Mohammed bin Salman. And President Trump's Middle East trip will take him back to a region that made huge investments in the U.S. during his first term. Now, Saudi Arabia, Qatar, and the UAE are aiming even higher with their aviation and defense industries to turn commercial deals into political capital. Qatar Airways is set to make the biggest splash. The carrier is putting the final touches on an order for around 100 Boeing wide-body jets, according to our reporting. Now, I spoke to the CEO a couple of weeks ago.
We have released an RFP for a new order of wide bodies. It was, I remember, March or April last year, and it is going according to plan. We were anticipating or planning to announce it in April. We might be a few weeks late.
For more, our aviation reporter, Dinan Rashtan, joins us now. Well, that was a throwback to my interview with the CEO of Qatar Airways just about 10 days ago, and he hinted that a big wide-body order was coming. What do we know about this order?
So they're planning to order around 100 firm, and then they might order up to 100 more. So that's around 200 jets, all wide-body, going to Boeing. That's a huge order. Airbus had been in talks with Qatar Airways, but from our understanding is that Trump has swayed this order in Boeing's favor. They plan to announce this when he comes to visit, and the other states that are on the schedule as well, they plan to announce big orders. From Riyadh, we're hearing it's going to be mainly defense, although Riyadh Air, their new startup carrier, is also looking into buying more wide-body jets.
Yeah, do we know what jets specifically they have in mind?
Qatar Airways is mainly interested in the 787, the Dreamliners.
Yeah.
They might also buy a few of the 777Xs. Those are still not certified and they're years behind schedule.
Yeah.
So those are kind of in the mix. And then later on, maybe at the Paris Air Show, they might buy a few
and that's an order for others. Yeah, the 777X is interesting, right? Because I've spoken to many of these airline CEOs alongside you at the Arabian travel market, and the 777X, most seem to think will get delivered at the soonest end of 2026, maybe beginning of 2027. How are these Boeing delivery delays being factored in, if at all, into some of these new order announcements?
Well, you might think that Boeing delays would cause people to not want to buy anymore, especially if they're still not certified. That could factor into Emirates, who's also looking into buying the jet. But the problem is these carriers, they have the 777s, the older versions, they need to upgrade them. And also a lot of this is political capital. They want to make big splashes. They want to get on Trump's good side, and they want to show him that they have allegiance with the U.S. So. Yeah. These orders are political and also kind of necessary for the airlines. They have to upgrade.
Lean, so exciting. Well, let's see what happens next week with these announcements. And of course, we will be keeping an eye on some of the deals that are going to be reported specifically in the aviation space, with many of these local airlines, GCC airlines, set to announce orders for Boeing jets. So we'll see what happens next week. Well, Qatar spent billions of dollars preparing for the 2022 World Cup. The nation bet that the global spotlight would spark a lasting tourism boom. Now, 3 years on, that gamble appears to be paying off. International tourist arrivals surged to 5.1 million last year, up 25% from 2023. Nearly 2 million people have visited Qatar so far this year. All this is fueling optimism that the gas-rich nation could surpass its targets ahead of schedule. Qatar aims to position itself as the capital of sports and is set to hold several other major events. That includes the FIFA Under-17 World Cup and the Formula One Grand Prix to attract more visitors. And this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The UK has announced a major new trade deal with India as it seeks to deepen economic ties with other nations. The deal slashes tariffs on cosmetics, vehicles, alcoholic beverages, and other goods. The UK says it expects the agreement to boost bilateral trade by $33.6 billion a year. The UK and US are said to be in intensive discussions about an economic agreement that would reduce the impact of some tariffs. Sources say a team of British officials are in Washington this week to negotiate terms. We're told there's optimism a deal can be struck, but possibly not this week. And the EU plans to hit about $113 billion in US goods with additional tariffs if ongoing negotiations fail to yield a satisfactory result for the bloc. Sources say member states will consult on proposed retaliatory measures for a month before the list is finalized. And Friedrich Merz has won a parliamentary vote to become Germany's new chancellor on his second try after a shock loss in the first round. He is the first incoming chancellor since World War II who's failed to get enough votes first time around. Bloomberg's Oliver Crook has more from Berlin.
After a day of political upheaval here in Germany, the nation finally has a new chancellor, Friedrich Merz. This was supposed to be a procedural process. This was supposed to be brought before the parliament. They were supposed to vote, and then the new chancellor was to be sworn in. That is not what happened. In the very first hours, in the very first stumbling block, the parliament failed to get that majority, and Friedrich Merz's future as the chancellor of Germany was put on hold. That led lawmakers and journalists alike to grab for the German constitution, because this has literally never happened. In order to understand procedurally exactly how to go forward. They later held a vote later in the afternoon, and Friedrich Merz finally was able to pass and be announced and elected Chancellor of Germany. And this was supposed to be a moment in which you end the political upheaval of the last government, which fell prematurely back in November, and to usher a new age of German stability and able to deal with the litany of issues that lie before the German economy, whether it's the fact that it's been in contraction for the last 2 years, whether it's the fact that there are these tariffs coming from Donald Trump, the question of foreign policy and the lack of leadership within Europe. Friedrich Merz really wanted to cast himself as that strong leader of Germany and potentially within Europe, and he comes into the office now with great doubts about how strong this coalition is and how effective they're going to be at governing, particularly with the deployment of that 1 trillion euros worth of debt finance assets to build out infrastructure and to build out the defense industry. How certain are they that they're going to have the agreements in order to effectively deploy that capital in a day that was supposed to bring political stability into Germany? Really has brought a lot of sort of chaos and a lot of sort of doubt about the future of this coalition government.
That was Bloomberg's Oliver Kirk on all of the political developments in Berlin, with the Chancellor Friedrich Merz now actually sworn in to office after a second attempt. All right, let's take a look at how equities are faring. It's going to be a big day for markets, the Fed meeting coming up, but then also positive news out of China from a sentiment perspective with those rate cuts that were announced by the PBOC, and positive signals on trade talks between the U.S. and China. So things leaning towards the green. But let's also flip over and take a look at how the Pakistan and the Indian stock exchanges are faring respectively. The KSE index in Pakistan down 2.4%. The Nifty in India down about 0.1%. This after an intensification of the conflict between the two sides. India conducting high-intensity strikes on Pakistan. Pakistan, an army spokesman saying that they have shot down 5 Indian jets. So all of this has happened just in the last few hours, keeping a close eye on developments over there. But that was it for our show, Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.